Good day everyone, and thanks for joining me on another episode of the Mortgage Chat. Today, I'm going to quickly show you a real life example of what we've just done for one of our clients that's going to buy a property under the SMSF. And what is an SMSF? Self-Managed Super Fund. So a lot of your super right now is probably in the industry super fund. Now, when you move it into your SMSF, self-managed super fund, you manage it yourself. So you can invest in an asset of your liking as long as it meets ATO requirements. But guess what? It also allows you to leverage and buy a property and get a loan within that SMSF. And today I'm going to show you how that can be done, because a lot of consumers out there believe that you need a big deposit, like a 30 or 40% deposit, or you need a minimum balance, which is all BS, because I hear a lot of noise out there that is not true. And today I'm going to show you how our clients just purchased a property under the SMSF with minimal deposit. They do have a decent income, but the super balance is not as high as in comparison to the income, because they just started work 4 or 5 years ago. So for everyone that's listening to this podcast right now, please just jump online on YouTube, look at my video so I can show you the breakdown a lot more easier. So let's get cracking and let's jump onto the computer right now. Okay, so thanks for joining me on this podcast and going to YouTube. So as you can see here, this is just a breakdown of what we've done for our client. Now, before I go down any deeper and delve down to what we've done for our client, let's just give you a bit of breakdown. Okay, so the super balance right now is $190,000 combined, okay? And they're both on $125,000 and $95,000 as a salary, and they're getting paid 12% super, okay? And we're going to use a proposed rental income of $550, all right? And based on the employee super contribution and based on the proposed rental income, their borrowing power is around $520,000, okay? So that's our starting point. Now we'll work backwards, right? So you'll see here, the super balance is $190,000, okay? But we are not going to use the whole thing. We're going to use around $163,000 and a little bit of change, okay? And I'll tell you why. Because number one, we have to leave 5% liquidity of the loan amount, okay? Some lenders need 10%. Some lenders need 10% of the super balance. Some lenders don't need any liquidity at all, right? But for this particular lender, they want 5% of the loan amount, which is not a bad thing, because in case they lose their job, they want to invest in other stuff, right? They got a bit of buffer to cover the shortfall of the repayments if anything happens, okay? And also you got insurances to cover as well within your super. So how we break this down is they want to buy in Tassie, okay? And they want to maximize their purchase price based on the super balance. And it ended up being around $650,000, okay? And how do we break this up? Well, stamp duty, solicitor costs, legal sign-off, okay? Changeover costs like prorated council rates, water rates, etc. Setup costs for the SMSF, your SMSF deed and your bear trust, bank fees, valuation fees, etc. Okay, it totaled around $33,677. All right, now 20% of 650 is $130,000. So therefore, you see here, 20% of 650 plus the soft cost, and that's where we got this amount. Okay, and that's where we are borrowing 80% of the purchase price and leaving 5% liquidity. Okay, so this is the breakdown based on the borrowing power and super balance. Okay, now let's work out the cash flow of this property. So on a $520,000 loan, which is over here, we move over here, right? 520 loan at 6.49% interest at P&I repayment over 30 years. That's the repayment every month. Okay. Now, the rental income is 550. Okay, per week. That's your rental income per month. All right. So how did we work this out? 550 times by 52 divided by 12. This is where we got this. Okay. We normally like to deduct 30% for expenses, right? So I'm talking about property management fee, council rates, water rates, insurances, okay? Mate, look, it could be 20%, it could be 15%, it could be 25%, it could be 35% if you're buying a strata property, okay? But we like to keep 30% as a rule of thumb, all right? So that minus that, your net rent is $1,668. Now, this is where we work out the cash outlay, Okay, the cash outlay is obviously the rent's not going to cover the repayments, so therefore you got a shortfall of 1615 per month and 19,380 per year. Okay, so if you look down here, I'm going to add the SMSF yearly costs on it. So you're talking about your yearly tax returns, registrations for your SMSF. Okay, look, mate, it could be 1,500, it could be 2,000, it could be 2.5. Okay, so I'll just use $2,000 for now. So I added $2,000 onto this, which equates to 21,380. Okay, now remember the super contribution. This super contribution is used to cover the shortfall. Okay, so their super contribution is 26,400. It's going to cover the shortfall per year right here. Okay, so therefore they got a bit of change remaining. All right, and another thing we have to consider is the remainder of the super balance. Okay, which is that. And I didn't use the whole thing, right, as well. So it's got 323 right there. So the remaining super balance they have is 26. So the remaining super balance they have is 26,323. We're going to assume they're going to earn 3.6% as a term deposit, right? But they could be investing it in stocks or ETFs, you know, but we'll just use 3.6% as a base for this scenario. In this case, they're going to earn just under $950 a year on that super balance remaining. Therefore, the excess they have after paying the shortfall is just under $6,000. Okay, and per month it's just under 500. So what can they do with this excess of $497.30? Well, they can put in the offset account if they have an offset account against this SMSF loan. They can invest it in stock. They can invest it in the stock market, or they can use this extra money to pay down the loan a lot more faster, which is what a lot of people will do because the rate is actually quite high and they want to pay off this SMSF loan before they retire. So let's break it a little bit more. How fast they can pay off this loan by if they contributed an extra $497.30 per month into this loan. Alrighty, so if you jump into my website, okay, you'll see calculators. And you'll see a section here where it says extra repayment calculator. Okay, now let's break it a bit more down. So if their loan is $520,000, their rate is 6.49, paying monthly. Okay, we're going to pay extra repayments from day one. And they're going to pay, what was that, 497.30 cents. So now look at this. Instead of a 30-year loan term, they're going to be paying it off within 21 years. And look at that. They're going to save 8 years and 11 months just by doing that. And they're going to save interest of just under $230,000. Okay, so not bad, right? So if you're you know, call it 35, 40, and you're going to buy an asset for 650,000, you can potentially pay it down before you retire. And what does that mean? Rental income, passive rental income on this property. And that's why we get a lot of people with big super balances buy two cheaper properties purely for this scenario right here. So there you have it, everyone. I've just given you a breakdown of what we've just done for one of our clients based on the income and the super balance. And you can do it with a 20% deposit as long as you can cover the deposit, stamp duty, costs, and sometimes liquidity. And don't listen to all the noise out there saying you need a 30, 40% deposit or even a minimum balance of $250,000 in the super balance, because it's all BS. And people that are saying this don't even know what they're doing themselves. So remember, there's a lot of videos on my YouTube channel that is going to build a foundation for your investment journey, such as how to use equity, how a trust loan works, how a guarantor loan works, how to structure an investment portfolio using second and third tier lenders. So please stay in tune, please give this channel a follow, and I'll see you soon.